Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Lab.com. Welcome to today's recap and look ahead. So we had the Fed minutes, and the Fed minutes were definitely more hawkish. I think the street was a little prepared, but not as prepared as the hawkish that it could be. You know, the morning we talked about, can we break below the neckline of the Head and Shoulders top pattern, and said a few things. You know, if the banks react well to JP Morgan's dividend raise and they all take out those pivots, it's going to be hard for the market to break down from that spot. You know, plus you had some strength in Apple, you had some strength in other places, so it was definitely just one of those computer-led situations where you had to be like very careful around pivots. In the morning, they tried to press the market, couldn't press, went back up to that 205.80, 206 area, and then sold off. And you know, it was definitely an easy day to lose a little bit of money. So where does it leave us now? It looks like the obvious trade overnight. You know, you have the U.S. dollar stronger with the Fed perhaps raising rates, so that's why gold got hit. That's why oil got hit. So I would think if there is follow-through and it's not just a misdirection type play, there are probably some traders short oil, short gold, or at least got out of them. You know, long some banks, and tech is pretty much mixed. If you look here at the chart of the SPX, you will see, all in all, you know, I think it did settle a little bit higher. This tends to be a little bit behind. You know, still hugging here, okay, not falling apart, not triggering stops and cascading, but I don't know. I think that, you know, you have to be somewhat, you know, just cautious versus, you know, purely bearish. You know, here is your double bottom, here is your, you know, your commitment to it. Here's when the ascending channel broke, and although, you know, we've been figuring out whether or not this could trigger more downside, it's still, there's a lot of support underneath the market. So today's low for a pivot moving forward is now 2034. Kind of held that, you know, held above this obviously. So, you know, not the easiest of a trade. You know, if you narrowed your time frame down, which we do talk about, you know, maybe there was definitely some things to do within the day, but all in all, you know, we did not close below this support. You know, we talked about the pivot. If you're below 204.23, maybe you're short. If you're below it, come back above it. You know, maybe back to neutral, and played with it all day long. You know, we're still below this descending channel here. You have like two levels here. You have 1 and 2. You know, you still have the, you know, the making of this, but again, these patterns don't trigger until they get a break and close below with volume. And that didn't really happen today. There's still some buyers in there. Oscillators are kind of oversold. So at this point, just another day in the life. You know, if you look at the banks, the JP Morgan, if you remember, we talked about in the morning call. Wow. What was the level that we talked about? We said if we can get above this level and stay above it, it should be a catalyst for the banks, and it will be hard for the perfect storm of a breakdown. Well, pow, look at the size of that move. Almost right back to the prior highs. So, you know, or if you got long today, maybe you took some off and took a little bit for follow through, but this is a big move, you know, just in the course of this day. That's a trigger right there. That's why we talk about pivots. To get back to the highs, what did it have to do? It had to take out 62.56. Took it out with authority. You know, gave you a few levels in the morning note with Goldman Sachs. Goldman Sachs also, you know, took out the pivot, and now we'll see, you know, what's next. Big engulfing day. Biggest day in a while. Last time we had one of those was here, if you remember. That led to a little bit more follow through, so we'll see if that's the case. Citigroup also, we went over it. Wow, look at that. You know, this was the pivot, and from the note, kind of showed you the descending channel here in the morning call, and I took it out with authority, so hopefully, if you were long something, this made sense, right? Dividend raise at JP Morgan, they have their buyback, and now you have a potential of a hawkish Fed. You know, there you go. So that made some sense. You know, then you had oil on the defense. You know, first the inventories were, I think they were a build versus draw, which it should have went down on that. Then you had the Saudi Arabia news that they might have to write IOUs, so that was a little bit bearish. So if you know, went home long, you know, short some oil, you know, maybe you'll get a little bit of follow through tomorrow. Here's your USO. The USOs did do a little bit of a red dog reversal today to the downside. So if you were looking to short oil, this is your first little signal. Here you go, the USOs boom to the downside. You probably could still do some after hours if you wanted to. You know, it could come back to the 8th day and still be fine. Some guys for the juice, probably along DWTI. Okay, look from where it is to all the way down here. You know, why not a little chance? It went below 73.30, put a low in at 71.89, closed above it, so perhaps there's a little bit of a money trade for you guys there. If you're going to get some follow through tomorrow. It's been a long trend to the downside, so maybe a hawkish Fed reverses that a little bit. And then there are a lot of other ETFs, in there. So if you were looking for something to do overnight, short oil and short some commodities. The GLD I had a call spread on for a while. Right when the news happened, I sold my GLD 120 calls just for a little bit, just to kind of salvage it, and got like $1.30 for those calls. I got more for the ones that I sold up here, the 124s, which paid for it. So all in all, still a decent percentage, but not what I thought it would be. And now, I think you have to be a little careful. Okay, what did this do? This broke this upper wedge, so now the GLDs could get more downside. Okay, this was your last move to the upside. Here's when it looked good. Bought the 120s, sold the 124s, and then tried to sit through it because I had till Friday. And now on this break, I'd rather salvage a $1.20 or 30 than maybe get a 0. And now if you were, in the GLDs itself, I would have gotten out of it, and I'm sure a lot of guys are short overnight. The NUGT, which is the gold miners. The gold miners, let's see what they did. They also had a big reversal, very potent reversal. So this could have changed the direction of the NUGT. Big engulfing down day. The GDX, I'll go to the NUGT after, to the downside. So, that trade started to get a little bit crowded. Then you have the NUGT, which is the ETF that goes with it. And look at that. Wow, pow. So I'm sure momentum traders overnight are short commodities and maybe long some banks and kind of neutral on the spiders that went below the area and came back above it and didn't show so much weakness. In the names that we trade, Amazon, down 4 days in a row. It did hold the spot, so maybe that some guys took a look at that. Facebook also back and forth all day long, closed green, still holding its earnings gap, so it's still kind of it's still in the game, looking okay. Apple, we talked about, can it hold 93? It held 93, didn't even get down there, and still, trying to react to the positive side ever since the Buffett news right here when it reclaimed this spot. All these two candles got trapped, and now I guess we'll see if it makes its way back up to the gap if the market wants to hang in there. Still, it's just a trade. It's not a new trend, and we're going to measure it the whole way. This is when the trend from the February lows took place, and now you have the potential of something new. It's reclaimed the 8-day. Now maybe on a tactical level, we'll see if that continues. And then you have this dirty, did I say dirty? Dirty move in Tesla. Okay, this morning in the morning call, remember, I'm like, you had Tesla, which broke to the downside here and then lost a 200-day there, was upgraded by Goldman Sachs today. I said, wouldn't it be funny if they're the underwriters of the secondary and they popped it up to get a little higher and squeeze some shorts? Well, after the close, if you're on the VTF, Sperling was long a little bit, I was long a little bit, thinking, why would they announce a secondary the day they upgraded, and PS a secondary gets announced, it's down $7, and that's definitely going to raise some media speculation and talk, and there's nothing you could do about that except for that's kind of crazy. Talk about Chinese walls, like it is what it is. So I did get out quickly after hours, I think around 2:05, I don't know where it is now. Sometimes that happens. It's like a broken hand. You get I'm not even going to make the whole analogy. Just that's dirty. Anyway, let's just shake it off and move past it. But just wow, I can't believe that the same day they upgraded it, they do the underwriting. So we'll see how it performs tomorrow. And then there's really not much else to go over. Everything else is kind of mixed. Market didn't have downside follow through. Maybe we'll see what the true colors are tomorrow, if there are any true colors. The VWAP has been, the king of the market. Market, goes away from it, below it, comes back to it. That's where I guess most of these institutions want to have their cost average, which is the new game in town. And BP goes over that really well in the chat, and so do some others. So hopefully you follow him because he gives you the levels where these things gravitate back towards. And, lots of moves today. And now we'll see what happens tomorrow. Hopefully you had a decent day. Again, we tried to talk about levels of what could happen and what then it could yield to, and at this point banks were way too strong for the market to come down. Commodities did what they were supposed to do, at least sold off when the dollar rose. Tech kind of mixed, and you have to pick and choose your spots, and now we'll see if we hold today's lows, or if tomorrow we get some kind of trend day, which sometimes happen after Fed day, so maybe we'll see if it happens after the minutes. Have a great night. I'll see you tomorrow.